Assalamualaikum warahmatullahi wabarakatuh to all members and our lecturers. We would like to present our group assignment about financial planning for insurance and investment planning. So meet my team. First presenter is me, Nurul Najwa Husna binti Sharudin. Next is I'm Fitrisha, Izwani, Nurul Hana, and the last one is Hidayati. So let's get started our presentation for subject financial management. So, Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul Najwa Husna. I'm going to introduce you guys about our financial planning that we choose. It's about the insurance and investment planning. So, for information about the background of insurance planning, insurance is the transfer of risk by an individual or organization to the insurance company where it involved between insured and insurer. So, the main goal of insurance planning is to identify and evaluate the risk factors in one's life so that there is enough to coverage and a peace of mind to handle some case of disaster happening. So, like what I'm saying, that these both parties enter a legal contract for the insurance called the insurance policy. As you guys wanted to know that there are two types of insurance planning, which is a life insurance and general insurance. Next is about the purpose of insurance planning that we choose is to identify and analyze risk factors in life and seek proper coverage. Next, it is protecting yourself against accidents and getting coverage for costs related to hospitalization. And then finally, the purpose about the insurance planning, we need take some of the financial burden of having insurance to cover the repercussions of such a disease, a damage, or permanent disability, as well as death, and liabilities, anxiety, and stress for you and your family. So for next is about the background of investment planning. In a finance, investments mean the purchase of financial product of value within an expectation of favorable future returns. This is the commitment of funds which have been saved from a current consumptions with hope for profit in the future. Nowadays, there are many investment vehicles to invest in, and most common being cash, equity, bonds, and property. But investment planning has the investment risk. They are constantly presents inflation, interest rate, market, company failure, changes in economy, policy, war, and a variety of risks make investment planning sometimes give a big impact to us. So the purpose of investing is to increase the amounts of money invested in liquidity. Thanks to investment planning, they can effectively budget for monthly charge, bill payment, taxes, and other obligations. So they are aware of their income, including their salary, interest, and dividends, and whether or not it is enough to meet their financial goals. So this methods of handling income is superior because it is planned. Keeping tabs in our income and expenses will help you to stay on top of your saving in financial planning. So, lastly, about the purpose of investment planning is making a smart investment for our financial planning. Life is better, so it will help in providing us enough to funds to make our dream fulfill. So, investment planning is a very important before investing because nowadays most people have a portfolio which is consistent about various investment vehicle like the stock, gold, bond, government schemes. So a proper investment plan is needed in order to secure our future financially.
Okay, next, Nurul Hana, will be talking about the importance of both insurance and investment planning. Firstly, let's start with why insurance planning is important. Nowadays, insurance has become a necessity in our life and has become one of the necessary components in our financial plan. You may have an emergency money fund if anything happens, but it doesn't hurt you if you have insurance in case anything happens to you or one of your family members. By having insurance planning, you can strategize your next move when the rainy days come. Secondly, insurance planning is important in order to protect yourself, your family, assets, and your business. Well, it is undeniably that unexpected twists might happen to us anytime, and It may trip us up in life or stop us from living every day to the fullest. Okay, let's say a family only relies on one individual in the family for financial support. What happens if something happens to that person? At that moment, insurance will prove to be essential. Last but not least, insurance planning helps to ease your burden if anything happens. When unexpected and unfortunate incident takes turn in your life, at least you can sit back and relax a bit knowing that the insurance company will cover it for you. Okay, now let's move on to the importance of investment planning. When we hear the word investment, of course, it is closely related to obtaining profit in the future, right? Yes, one of the importance of investment planning is due to the potential of getting a higher return in the future. Nowadays, there are various types of investment planning. For an example, you can invest in form of cash, bonds, securities, and properties. You can simply choose the best that suit your economic status. So, by planning, it helps us to see the rate of return of our investment, and from that we can judge it if it's worth or not. Next is by having a good investment planning, we actually are securing our financial savings for the future. Your today's investment will eventually become your regular income in the future, especially for those who are reaching retirement. So, it can be said that by planning a good investment plan, it can help us to avoid running out of money in retirement. And the last important of investment planning here is it actually can be used to assist us in selecting the appropriate investment based on our financial goals and objectives. It is important to know your financial situation and only invest in things that you can afford. You don't want to invest in something that might cause you trouble now, right? So, it is important to evaluate your financial status first and plan your investment strategy before getting into one.
As we all know, the year 2020 until today, everyone around the world was impacted by coronavirus. It includes individuals, society, industry, and the global economy. It's true that there exists virus known as coronavirus. The first case was detected on the 31st of December 2019 at Wuhan, China. Then, one of the Chinese officials discovered on January 7 that these cases were caused by a new coronavirus that they have provisionally named as 2019 nCoV. It is subsequently spread all across the world and becoming the fifth pandemic that has been reported since the influenza pandemic of 1918. More than 500 million cases and over 6.3 million deaths were attributed to COVID-19 by June 2022, over 3 years after the virus was first detected. In the early stages of the COVID-19 pandemic, there was a significant and speedy decrease in employment, with the rate of unemployment reaching its highest point in April 2020 at 14.7%. The first 2 month loss in employment during 2020 was about 50% bigger than the 2 year decrease in employment that occurred during the Great Recession. Therefore, not only does losing a job result in a loss of money, but it also results in a loss of health insurance. The high expense of COVID-19 related medical treatment increase the likelihood that uninsured individuals will have unfavorable outcomes. Business and individuals have suffered massive loss since the World Health Organization (WHO) declared COVID-19 a worldwide pandemic. Despite the fact that the insurance industry has not been spared from the crisis, insurers have moved quickly to respond to it. Therefore, even though many people have lost their jobs, the insurance claims are at all-time high. Many people now realize, in light of the worldwide pandemic, how important it is to get health insurance, which can help them financially and guarantee them good care in case of an unexpected medical emergency. Due to a lack of appropriate treatments and medical care during an emergency, many individuals have lost loved ones in the last of several years to the coronavirus fatal onslaught. In addition, a health insurance policy provides a sense of relief to the patients that seeking a treatment as it protects them against the high cost of treatments, thus saving them from draining their financial savings. For an example, there are high requirement of an ICU during this COVID-19. During this pandemic, there has been a significant rise in the need for intensive care unit, which is ICU. Every other patient infected with the coronavirus requires emergency treatment, and in certain cases, the patient must be hospitalized to the intensive care unit for ventilation support. Besides, health inflation has been rising at a far faster rate than wages, making it impossible for middle-class families to afford private hospital care. Mm, then, health insurance policies protect against this by guaranteeing that policyholders get excellent care at a hospital in the insurance network. According to the COVID now statistic, the COVID-19 is increasing day by day in Malaysia, same as the other countries. As of 24 June 2022, with over 4,500,000 confirmed COVID-19 cases, over 27,000 active cases, over 35,000 deaths, and nearly 500 hospital admissions in a day, Malaysia is currently ranked 9 in the Southeast Asia statistic for the number of COVID-19 cases behind the Indonesia.
Next, current issues and statistical information. There are four current issues that are related to the investment, which is high inflation, rising commodity prices, disruption of supply chain, and increasing interest rate by central banks. First one is high inflation. When COVID-19 was just starting to spread fatally, the average annual inflation rate in the first quarter of 2022 was at least twice as high as it was in the same period in 2020. First quarter inflation was more than 4 times higher in 60 countries than it had been 2 years earlier. This shows that high inflation has gone global and may be getting higher and higher. Turkey has the highest inflation rate of all the nations in the first quarter of 2022, coming in at the startling 54.8%. Turkey has had high inflation for a long time, but in late 2021, it spiked as a result of the government's unorthodox economic policy, such as reducing interest rates rather than raising them.
Commodity prices, such as the price of crude oil, metals, grains, and other internationally traded commodities, are rising at the highest rate in Turkey since 1995. Commodity markets are being squeezed from two directions. On one hand, growing demand as economies recover from the pandemic COVID-19, and on the other hand, difficulties experienced by suppliers to meet the growing demand. As a result of the commodity squeeze, the market has experienced a number of domino effects. For example, the price of ammonia, a key ingredient in fertilizer, has increased due to rising natural gas prices, which in turn has raised the price of grains, resulted in expensive food. Supply chain risk and supply chain management have moved to the top of everyone's agenda since the beginning of the COVID-19 pandemic. Even though it has been 2 years into the pandemic, the global supply chain continues to sputter and break down. Supply chain disruptions are still in recovery mode more than 2 years after the pandemic, caused by key material shortages, labor shortages,
demand volatility, lack of production capacity, unpredictable freight transit times, and increasing costs of transportation. Next is increasing interest rates by central banks. Here is the example of interest rates increased by central banks in different countries. Firstly, in Brazil, the interest rates increased from 12.75% to 13.25%. In Ukraine, from 10% to 25%, in Canada from 1.0% to 1.5%, and in Australia from 0.35% to 0.85%. These increasing interest rates implemented by central banks is to battle the record high inflation. The central banks aggressively raised their interest rates in order to reduce the money supply, which reached an all-time high during the pandemic when the world was in lockdown. So, how all of this economic situation affect the way people invest? Firstly, central banks are probably going to think about increasing interest rates if the inflation rate rises. Higher interest rates will make borrowing more expensive and discourage investment. Secondly, unexpectedly high inflation rates will increase uncertainty and discourage businesses from making high-risk investments. In periods of uncertainty, investors may pull out of shares and put a higher percentage of their portfolio in safer options such as government bonds or physical assets that hold their value such as real estate and gold.
So guys, next for recommendation, the first for insurance, as per recommendation, taking insurance planning right now can be nearly as investing for our future wealth accumulation. So since the pandemic COVID-19, many diseases have been present, and it is time for everyone to take insurance planning to prevent the high cost from hospitalization. So in Malaysia, where is financial sector is a very bright because we have a many option to choose insurance from various companies. So due to COVID-19 disease, I think many are beginning to realize the importance of insurance planning. Finding a trustworthy insurance company that can help us when we need it is a crucial factor to take into account when buying insurance. So recommendation for investment, I think is it finds an investment instrument that can outgrow the current inflation rate. I know for 2022, in an environment of high input costs and improving demand, headline inflation is projected to average between 2.2% and 3.2%. Underlying inflation, as measured by core inflation, is also expected to trend higher during the year. So averaging between 2.0 to 3.0% currently is much changed by Bank Negara Malaysia over monetary policy. So the last one, I think is important for investor to have a device portfolio with some income distributing investment because this tends to give investors some protection during market shocks and volatility.
As a conclusion, we can say that having an insurance and investment planning is very crucial since we can obtain a lot of benefits and important from it. For instance, it can be a backup plan of money if something unexpected happens, or it can also ease our financial burdens that can occur when disasters strike such as COVID-19 pandemic. While investment planning can act as safety net in case of emergencies of after retirement, it is also advisable to invest money in various portfolios in order to secure your future and your loved one. To have a lucrative investment, you need to have a strong investment plan that will guarantee the accomplishment of your financial and investment goals. So, it can be said that having whatever financial plan is very good as long as you know the importance of each of them. Financial plans can stretch over years, months, and decades depending on the time horizon of your goals. However, by taking a few seemingly insignificant efforts such as setting a monthly saving target or investing some of your income, your financial plan can lead to much better preparation for the future.